From FXEmpire, this is Chris taking a look at the S&P 500. You can see that we gapped at the open, broke down below 2,200, and then raced towards 2,400 as the Federal Reserve announced that it was going to do quantitative easing. They are buying corporate bonds and ETFs that are involved in corporate bonds, that type of thing, mortgage-backed securities. They're really kind of going after everything. So, as Wall Street has thrived for well over a decade on cheap money, that was the initial reaction. However, as somebody who has traded through these types of crises before, I can tell you that there are a couple things you need to pay attention to. One is, when does a bad announcement not cause a negative reaction in the market? When does a good announcement not cause a negative reaction in the market? And the reason I say that is, undoubtedly out there are a lot of people asking right now, what does the Fed know that we don't? And they get nervous, and that's why we got the sell-off. And in fact, the move to the upside was so quick it almost had to have been algorithmically driven. So having said that, I think you still have to look for selling opportunities on rallies. I think 24, 2,500, and 2,700 are all candidates for selling pressure. Now, that could change if the right combination of good news comes out that the market reacts positively to. But the fact that we gave up this much so quickly, it tells you we're not at the bottom yet. We just aren't. So one has to err on the side of caution, fade rallies until the attitude changes.